is something people don't talk about enough. And when you put military, industrial, and monetary into an asset that is depleting in nature, is coming out of the ground at 7-1, but priced at 84-1, historically 16-1 for 5,000 years. In every way you spin it, to me, it is the most undervalued asset on the planet, maybe the best investment. As of last week, there was about 13,000 silver contracts delivered that stood for delivery, or 65 million ounces off of COMEX. And that's a massive amount. We had 240 tons of gold delivered since the beginning of the year off of COMEX. And as I was looking at it a week ago, I saw that over the previous 7 days, 55 tons of gold had been delivered over the previous 7 trading sessions. This is a rising tendency. We've seen recently BlackRock purchase $175 million worth of PSLV. And this is on top of the fact of a 237.7 million ounce deficit in 2022 in mine supply versus demand, the second annual deficit. When we look on COMEX right now, there's somewhere in the neighborhood of 27 million ounces in the registered category. Only 27 million. Those are the bars that back the contracts that are out there. And, there's, 5 times as many contracts or open interest as there are bars backing the whole system. When you talk about 27 million ounces, sounds like a lot, right? Well, India imported 304 million ounces last year. The previous 2 months in what's called exchange for physical, where contracts on COMEX are exchanged for physical and delivered off of the LBMA, almost 250 million ounces. You look at the total number of ounces on COMEX right now, it's about 273 or 4 million ounces, of which only 27 million ounces are up for sale. The majority of it belongs to people who have no intention of selling. Over half of it supposedly belongs to JP Morgan and the SLV, largest silver trust in the world. There is basically no silver on an industrial wholesale level, really hardly anything available for delivery when you factor in the fact that the number of contracts written against the bars for sale are exponentially higher. This is the same thing the Hunt brothers noticed in 1980. At what point can you continue to naked short a market where if you get called for delivery, you're not able to deliver? I'm not saying we're imminent threat of seeing the COMEX collapse, but we're as close as we've ever been. And so, I think that silver is probably the most undervalued asset on the planet. In fact, just a couple of weeks ago, there was a report issued that came out by the United States Geological Survey Committee. It's a branch of the U.S. government, who said by 2036, they estimate that all in-ground reserves could potentially be depleted globally. They came out and said by 2030, the majority of all the in-ground silver in Mexico could potentially be depleted. And they went as far as saying it could be the first element struck from the periodic table of elements. And so you tell me, what asset has the duality that silver does in demand of both an industrial metal, massively used in a green and digital environment, hugely used in military, over 500 ounces in the tip of every Tomahawk cruise missile, thousands and thousands and thousands of ounces in every ICBM. God forbid we ever start firing those off. But the need for silver in the military is something people don't talk about enough. And when you put military, industrial, and monetary into an asset that is depleting in nature, is coming out of the ground at 7-1, but priced at 84-1, historically 16-1 for 5,000 years. In every way you spin it, to me, it is the most undervalued asset on the planet, maybe the best investment. There are signs that are becoming too hard for people to ignore. And when you see these types of changes, and when you see massive gold acquisition by countries like China, India, Turkey, Egypt, Qatar, Singapore, all of these countries adding to their gold reserves, and all of these countries involved in either the Belt Road or the BRICS or the Shanghai Cooperation Organization, you can see what is important to these countries. And what is happening here in this country, I think, is rapidly becoming
incentive for a lot of these countries to move away. One last thing I want to talk about is a pushback between capital standards that the Basel Committee on Banking in 2017, I guess you could call this Basel III, these major regulatory proposals that need to be put through the banks are pushing back against. And the U.S. Federal Reserve is finalizing this proposal, which would implement these mandates. And they're talking a lot about higher capital charges on non-interest revenue. And that would be things such as fees or credit cards or late fees or overdraft fees. And anyway, in any case, the rules want to maintain a much higher capital charge for money that is listed as, or a capital requirement for stuff that is listed as these capital requirements, these non-interest capital expenditures. And the banks are pushing back against it because they have virtually nothing in the way of reserves. And I guess what I take away from it, when the banks are pushing back against these standards being tightened, it just simply tells me that we have not even begun to see the end of the problems with the banking industry. And I think quite to the contrary, I think it is, I think by the end of this year, we are going to see a lot more stress in the banking system, a lot more. And you can see by almost $100 billion right now in this new emergency lending program that we are not out of the woods yet. So people who think we're out of the woods and that we're on the heels of a new stock market boom and we're going to get a soft recovery, I think or a soft landing, I think are going to be very sadly mistaken. And if I had to bet, as we approach the fall, and as a lot of these new, a lot of the commercial real estate loans reset and have to reset from a 3 or a 4 year ARM to rates that have doubled, you're going to see massive strain, not only in the commercial real estate, but the small businesses, all of which is 70% controlled by the small regional banks. And I think this time the difference will be Janet Yellen will let them fail. These people will be recognized for what they were supposed to be at the end of the 2008 financial crisis, and that is unsecured general creditors.